Good afternoon and welcome. This is Stephanie Kenner, part of the Learning and Development team here at My Local Aggregation. Welcome. Thank you for everyone that's come on board for this afternoon's webinar. For those of you that are here for the very first time today, today's session will be recorded and it will be available to you after this session if you'd like to share that with any of your colleagues or review the content. You are also eligible for one CPD point, so we'll make that available to you as well, whether that's with MFAA or FBAA. Today's session, we are going to run this very much as an interview style. For those of you that have been following living expenses, HEM, and your responsible lending obligations is quite a hot topic at the moment. And we've already been seeing since February this year some pretty serious allegations, implications and allegations, I should say, with the banks and also individuals. So we're going to be discussing that in a lot of detail today. I would also invite you as we go to ask any questions if you'd like in the Q&A section. I'll be monitoring those as we go and asking them of our two guests today or reserving them for the tail end as a part of the Q&A. We will be here for about 45 minutes or close to an hour possibly, depending on your questions. So please feel free to participate. We would love that. So joining me today are two very special guests that have got very really, I guess, specific backgrounds that are very helpful in today's topic. I guess it's really the brains trust when it comes to talking about things like this. And firstly, Lisa Forte, who's on my right, and Lisa is the head of broker support here at My Local Aggregation. But prior to that, Lisa has had many years in the industry. How many altogether, Lisa? You don't have to say.
Nearly 30.
Yeah. She did say nearly 30. It doesn't look like nearly 30, but Lisa's background has been initially in lending at branch level. She's also been a credit coach for one of the majors, so assessing files and assisting brokers with their submissions. And she's also been in fraud investigation, so that's really curious. I'll get you to explain that a little bit in a little bit more detail shortly. We've also got Zach Harb here, who I'm sure many of you know, and he's a business development manager at ME Bank, and as well as being a BDM, Zach's background previously was in banking.
Yep.
And also as a broker.
Correct.
So you've sat on many different sides of the fence in the industry.
Absolutely.
Yeah, great. So today's session, we're going to be focusing on responsible lending obligations. That's for the banks and also for yourselves as the broker. And we're going to be talking about living expenses and how to thoroughly assess those living expenses and how to document them, and all the important factors associated with that. The actual living expenses, the HEM, how we document it, really for the safety of yourselves, for the protection of the customer so that they're not put into any hardship situations. So legal and ethical reasons, we really need to ensure that we're doing this properly as a part of our loan submissions. And we're also going to be touching on, some of you may be aware that some of the banks, because there has been so much scrutiny in this area by ASIC, some of the banks do have red flags where if some of their brokers have been consistently using HEM or lower than HEM, for many of their files, they are noting that. There are reports and they are making the aggregators aware that some of their members need additional coaching in this area. So we certainly have been, and we take that very seriously. We've got a full-time broker mentor on board here, and in instances like that, we just want to make sure that our brokers are very aware of their obligations and assist them in that part of the process. So let's move on to our first questions. So perhaps I'll start with you, Lisa. Tell us about, just overall, tell us about living expenses, the HEM, and the broker's obligations.
The first thing is living expenses. So that would be any customer you're talking to, that would be their actual costs for their day-to-day living, anything regular. HEM is the benchmark provided by the lender. Every lender's HEM may differ. It's generally an average based on standard living costs over the past few years or a set period of time. Generally, most customers fall somewhere around that, but some people are actually a little bit lower, some people are quite higher, so it is really important to collect the accurate data. If you're using HEM and their actual living costs are higher, it means you could be giving them a loan they can't afford, and obviously you're going to end up in trouble.
Exactly. So I think we've seen, obviously we've got people on this webinar from all over Australia, but, we have seen living expenses increase quite a lot in some of the major cities like Sydney and Melbourne. Yep. And so I think where, previously we were able to look at, say, a 25% calculation of living expenses to debt, in some of those cities that's no longer applicable.
No.
Is it?
Yeah, absolutely. I think there's a few factors in that. So location is definitely one.
Yeah.
But it's also, we were having this conversation earlier, it could be the lifestyle and the family size of that customer.
Yes.
So all of those factors need to be put into action as well.
Even their income. Some living expenses for people that earn more are actually higher than the same size family who has less money because they have less to spend. Yeah. So they've learned to live on spending less, whereas people with more money tend to spend more. So that's something else to consider as well. It's not a blanket approach.
Exactly. And I think, that when the fact find was introduced a number of years, some brokers felt that was really the enemy. They were getting too intrusive, or they were asking the customer to fill in more paperwork, or they were delving too deep with their discussion. I think, for a lot of reasons, the fact find has been a very good thing for the industry. I think, from one perspective, it's allowing brokers to be able to look at other services or needs that the customer has long term, for their own benefit.
Absolutely.
Like insurance as an example. But also when we look at our obligations with responsible lending, the fact find is a very natural way to do that discovery.
Yeah, absolutely.
Yeah.
And that's the thing too, like you said, seeing it as an enemy. It's not an enemy, it's a way of documenting something, and should something, you don't want things to go wrong, but things sometimes go wrong. If something goes wrong with that file, you've got everything fully documented there. It's extra time you spend at the start to possibly save yourself a lot of trouble down the track. So I think it's really important. And as you said, it's a know your customer thing. So like you said, you could use that down the track to when they want to buy an investment property, they've already mentioned their targets to do that, or insurance products or stuff. So yeah, it's also of benefit in other ways other than just protecting yourself. So I think it's a really good idea just to spend the extra time doing that.
Yeah.
I think you'll also find that customers may find it intrusive, like that, this is too much, why am I giving you all this personal information? But it's about managing your customer and setting the expectation as to why. So explaining to them, these are the things I need because, one, we might need bank statements, and if we see something that's on there, it may make or break that deal. So having those meaningful and deep conversations does help. So
yeah. And it's put you in a position where you can be prepared as well. So because you've basically got all the information you need. So
yes. So before we get into what needs to be included as a part of living expenses, we might just revisit for everyone's benefit, I'm sure they've seen it in all of the publications, that earlier this year, one of the major banks did have federal court proceedings against them. So this is dating back, I guess, to a four-year period, where ASIC had said that this bank did not properly assess whether the brokers could make their mortgage repayments. And at this point in time, ASIC is investigating another 10 lenders over similar suspected breaches of responsible lending laws. So it is getting very serious now. From a legal point of view, and we'll talk about some of those implications that flow down to the brokers as well. So I guess just the last thing on that point is that some customers may just assume that the bank is going to assess their ability to pay, and the fact that they've been able to get their loan approved has meant that they should be okay. And so, but we know if the conversations, if there hasn't been enough discovery in the conversation by the broker, that a bunch of those expenses can be omitted, and in fact they can get into a situation where they can't afford.
Correct.
Particularly when interest rates start rising, we might have people that are just barely sitting there right now, and if there's a couple of rises, it might mean they can no longer afford their loans. So
absolutely, those buffers, if they haven't been included, if the interest rates were very low when they borrowed, the LVR was high, and something has changed, so they might have the interest rate's gone up, or they've come out. If it's an investment property, they've come out of an interest-only period for some reason, or a fixed rate, and it's reverted back to something higher. So, not allowing for that margin. Yeah. So what about? Let's talk about all of the various inclusions. It's quite a long list, isn't it?
Getting into a bigger list every day.
It's a big list.
Yeah, definitely.
So let's start with, we might break this down into categories, and we'll start with the really obvious ones, because I think these are probably the ones that brokers do include, that make sense. What would be all of the expenses under the housing sort of category?
Well, in the event they're buying an investment property and they're paying ongoing rent, so we'd have to include the ongoing rent. If it's not, sometimes lenders include that on their forms though as an ongoing liability, so it just depends on where you put it, but obviously it needs to be included somewhere. In any instance, as a homeowner, you'd be paying insurance on the building. Obviously, that's a condition of mortgages to have insurance on the building.
Yes.
Maintenance, your council rates. If you're in a strata building, you'd be paying body corporate as well. So, you just have to include all of the relevant costs for the particular properties they own.
Absolutely. Food and groceries. So there's sometimes some areas here that aren't included. I'm an animal lover.
Yeah.
And
lots of people spend a lot on their pets these days.
Yes,
Guilty.
So you look at the household bill for the food for the pets. So whether that's prescription diets or their cooking things, their accessories, right?
Pet insurance.
Pet insurance. Most people are taking out.
I was trying to see if there's insurance on.
So under food and groceries would be what we're spending for ourselves. So,
for all of the household, including the pets.
Including the pets, absolutely. And then some of our recreational food and grocery spending too would be alcohol, tobacco.
Regular purchases, any regular purchases. If it's something that they're going to stop doing, for example, further down, we'd probably ask about things like takeaway and stuff like that. If they're not going to eat out every night because they're taking on a mortgage, that's fine. Mitigate it in your notes. If it is something they're going to continue doing because that's the lifestyle they enjoy, then obviously include it in your costs. It's just a matter of asking the questions and recording the answers and proving them if possible.
And I guess, sometimes with living expenses, depending on the household, some people might have a combination of cash, credit card and EFTPOS. So it's hard for them to recall a figure just like that, isn't it? So that because they might have some incidentals at the supermarket, $10, $20, $50 here or there. They might have their weekly shopping that goes on credit card. So it really is up to the broker to sort of try and get that full total picture.
The majority of people, their income gets paid into a bank account. So you can see if they're transferring onto a credit card or withdrawing cash or the FPOS purchases. So it shouldn't be too hard to get a few months statements and actually have a look at some historical transactions and see what the average spend is. Obviously in times at the end of the year like December when people are buying extra for Christmas might not be so accurate. So I'd get another month's just to make sure that you're looking at around 3 months data just to prove some consistency.
Yeah, absolutely. With utilities, we've got heating, cooling, power, water, gas, sewage. They'd all be pretty standard.
And things like that as well. I mean, I've dealt with customers who have solar panels and so the cost has been put as zero, but if you don't put notes in there, I don't know that. So again, just put zero and write solar panels, or if they've got tank water or they don't have gas connection, just write it in there. If you're leaving blanks on anything, I always think it's a good idea to just write a note, just so if anyone else looks at it or if the file ever gets audited, then the story is right there.
As to why it is lower than standard.
Yeah, and I guess it's like with any, with any submission, you want to sort of cover those mitigating circumstances, don't you?
Especially if it's being assessed. You don't want your deal to wait an assessment for 3 days and then comes back with questions, then goes back into assessment. I mean, if you've got all the information there, hopefully it goes through first time. If that makes the whole process a lot easier.
Yeah. We've got other services. We've got phone, postage. So some of these might only occur on a very infrequent basis. So it might not be in the household budget.
If it's an annual fee rather than a monthly thing, but it's something they always do, then we'll still include it.
Right. And then just divide that into a monthly. Yep. Fantastic. So we've got things like swimming pool costs that might be just once or twice a year. Some households may have housekeepers, cleaners, security at times.
Back to base security costs has monthly fees.
Exactly. Yep. Good point. Entertainment and recreation. So there's quite a long list here, possibly things that may not get covered.
It's probably the one where things get missed the most. People will put a takeaway cost down but might not allow for the person buying a coffee or two every day. Things like going to the movies, sporting events. I think that's probably where people spend a lot of their money. Yeah,
this goes back to, again, lifestyle and how they, what your customers' lifestyle's like. So, And
again, people with kids, toys. I mean, you don't most cases you don't stop buying things for your kids. That they're always wanting something new. So if they've got young kids, then you'd probably expect there to be costs for that sort of stuff included.
Yep. So we've got just your normal eating out, entertainment, takeaways, lunches, coffees. So there might be some monthly subscriptions, like to do with Foxtel and those sorts of things.
Magazines, TV, even things like sporting memberships, stuff like that.
Apple iTunes, that's one easily missed.
And some people spend a fortune on it.
It could be at $20 a month, and then banks are like, what is this iTunes fee?
On the statement.
On the statements, and it's a regular fee, so it's a reoccurring, becomes a entertainment cost. So
a lot of things too, if they're not quoted or they're not included and the lenders do see it on the bank statements, that they will come back and ask. So if it's on the statement, it's always a good idea to either include it or make a comment on it if it's not a regular cost.
Yeah, absolutely. Clothing, obviously, clothing and footwear. So
can I just add something to that?
Yeah, please.
Is that okay? I don't know if a lot of people know, but there's a new app called Afterpay. So a lot of banks can now see that on their statements. And what Afterpay is a lot of customers that don't have upfront funds to purchase clothes, they basically can schedule it to go out fortnightly out of their bank account. So again, if you do see those ones, it's called Afterpay. So it's an app. I'm not suggesting go out shopping, but but just be mindful of that as well, because that will come up in the clothing area.
And it's always a good idea to ask your customer about it, because I've used Afterpay, and it tends to be over a period of 4 to 5 fortnights.
Yep.
So it's not an ongoing thing, but if you don't put a note on there, the lender will delay your application coming back and asking.
Correct, yeah.
So it's sort of like a lay-by, except you get
You
the
take
goods
now.
first.
Yeah.
Oh, I see.
Yeah,
Okay,
yeah.
great. I like that.
Yeah,
Yeah.
I'm a little bit hooked.
Don't get any ideas.
Yeah, exactly. So that's, clothing and foot care. Grooming. So,
That's another thing that gets missed a lot.
yes.
Obviously, people, varying degrees, groom themselves. So things, some people go for a haircut a couple of times a year. Some people go every few weeks and do their roots and get their nails done and their eyebrows. And
Eyelashes.
you know your customers. If they look like they spend a lot of money on grooming, ask the question. It's simple. And again, these things show on their bank statements. If they're regular expenses, they will most likely be queried.
Yeah. And I guess that's that, in our jobs, we're face to face with people. So
you can gauge.
You can gauge,
Yeah.
So, some of those questions, if you're dealing with certain customers where that, they've just, the male has buzzed his hair off with a pair of clippers.
Yep.
It may not be a really
High
probing conversation, and vice versa. You're looking at someone else that looks like that's
And
something
depending
they
where
really
you
value.
are too, if you are in a rural or industrial area, you might not, it might be hardly anything. But if you're close to the city or in one of the more affluent suburbs, obviously, you might find you've got a lot of customers in your customer base that do have those expenses. So again, it's just obviously your customers and your customer base.
Yeah. Motor vehicles. So we've got fuel, the yearly expenses, so registration insurance. They're probably pretty easy ones to remember. Maintenance. Some of the ones that might get missed would be car parking and tolls.
Tolls, big one.
Yep. And that can be, in Melbourne, pretty expensive. I think a little while ago I was paying about 120 a week in tolls.
Yeah.
So it can really add up if you're living in that, if that's your principal place of residence, really does add up.
Also, things like that is not to forget the things like the trailers, boats, jet skis. Those things obviously all have costs. So if they've got them, then make sure those costs are covered off.
Yes.
If they've got multiple cars, maybe.
Yeah.
You've got multiple regos, insurances. So.
Or alternatively, if they don't have a car, then do they have public transport costs? Because they should be included as well.
Yeah, right. Under the healthcare banner, we've got, they may have private health, and some people do take quite a few medications. So they've got sort of chronic ailments.
Yep.
Or even people who have like diabetes who have to take medication all the time. I mean, that's obviously going to be an ongoing cost for them. So make sure that sort of stuff's included.
Natural remedies. So
I like this one, massage.
well, I think that's legitimate. Some people have a really good massage.
Yeah, it's true.
Yeah, they do, and particularly in different professions, like hospitality. A lot of the kitchen staff have weekly massages, so that's a part of their job, I guess. But yes, anything to do with natural remedies, naturopaths, homeopaths, acupuncturists, chiropractors.
Anything ongoing. If it's something that they do occasionally, or it's not an ongoing thing, or they're on their last prescription, I wouldn't include it, but maybe put a note. But if you know it's going to be ongoing and you can see it on their statements again, anything that's on their statements, always just clarify, because the lender will always ask. So.
Great. So then we've got holidays, domestic, international airfares, accommodation, camping fees.
Yeah. And that's another thing people forget. Holidays, people think, plane. They forget about things like camping and road trips and stuff, and those things cost money too. So, it's just good to ask the question. And again, your customer, you probably know a little bit about their lifestyle. So if they're at the Murray every weekend and they're camping, just, ask them what the rough cost is.
Yep. Schooling. This is an interesting one, isn't it? Because we've got quite a variety in the education system. We've got private schools, specialist schools, we've got state schools.
Yeah.
Do the fees vary a lot?
They do vary. I mean, even between private or independent schools, the fees can vary depending on the prestige of the school and you know, what they can get away with asking for. But even now, public schools, generally there's compulsory fees. There's no real free schooling anymore in Australia. So if they've got children of school age, there should be some sort of associated cost for their schooling in their living
There's
expenses.
excursions, the list goes on.
Excursions, yeah, sporting events. Yeah, and on top of the fees, there's those little incidentals that do pop up all the time.
I don't see many schools these days look at books, but it's now more iPads, laptops. Every year they're upgrading to something new, and it's just, it's getting a bit too much.
That's right, uniforms, etc.
Yeah, and there's not many schools now that wouldn't make the kids wear uniforms.
Yes.
So, yeah, that's another cost we've got to allow for.
Exactly. And I guess in the other category, we've got things like childcare.
Yep.
So that's...
Childcare is a big one that gets missed.
It's a big
I
one.
know it sounds a bit silly, but it is one that does get missed a lot.
And it's usually, it's not cheap.
No,
So, yeah.
no. Some people are paying up to $700, a week in childcare alone. So, please be mindful of that one if you can.
Where would you put? Would you or not include maintenance in here, or would that be in?
Some lenders ask for it as part of the liabilities.
Sure.
Yeah.
Okay.
So, but if it's not included, then definitely include it. And again, that would probably be something that shows as a deduction on their bank statement.
Okay. Cool.
There's just one thing that I'd like to point out. I don't know if all lenders do it, but I know that we do in particular. When it comes to if you've got someone living at home and they're looking at buying an investment property, notional rent of $650, that's an expense that's probably not part of living expenses, but it is another expense just to be mindful of.
And that's an expectation? Is that what you mean there?
Yeah. So look, I know some lenders put a minimum of, so we do $150 as a minimum. Per week. I don't know what other lenders might do. Some might take actual, but that's like an average figure, roughly.
This is because we had people who were buying investment properties living at home and saying they had zero living costs because they're living at home. It's like, well, you probably still buy coffees and that for yourself. And, so they've built in this notional rent figure to actually cover the incidentals of somebody who would be living at home still.
Right.
So, so they still, that person might have because of that, have a low living cost, but there's obviously figures the banks want put in there as well.
Definitely. So they may not be paying board or rent. And their food's covered and their utilities.
But that still
However,
go to the hairdresser and that still go out and,
dry cleaning and
the
fuel
parents aren't
costs.
going to cover everything.
Sure.
So,
And banks want to put on a bit of a buffer in case, to allow for that space as well.
Yeah,
so.
Great. What would be, I think you've probably both seen some very low estimations of living expenses. Now, I think what we're sort of hearing so far is that whatever living expense is stated or whether HEMS has been used, the explanation needs to be there, doesn't it? If it's lower.
Definitely. If it's lower, I wouldn't go just explain it. I'd get bank statements on file to prove it, even if the lender doesn't ask for them. Should your file ever get audited down the track, it's perfect coverage to prove that you did ask the question, you proved everything that you could, especially if the loan falls over and the customer goes into hardship. No matter how good you are as a broker, you're the face of their loan. So if the loan becomes a problem, you're the face of their problem and they will blame you and they will report you to the Ombudsman if they feel they're not getting their way, even if you've done nothing wrong. So for me, it's all about covering your backside, really. I think it's vital.
Yeah.
You're in the best position to know your customer and it will go back on you. So,
And you've probably all seen in the media what happens to brokers who do get caught doing the wrong thing. MFAA will eject people, announce it. ASIC will announce it. So it's and how do you recover from that sort of thing?
Yeah, great. Well, actually, that's a good segue into our next area, which is the implications for both. So the implications for the customer. This is
that was touched on a little bit this year.
Yeah.
So first of all is obviously the hardship situation. If a loan falls over very early, you might find the bank that you're with will claw back your commissions. So be mindful of that, and that's not the only reason you should be careful. Also, like I said, if the customer feels unsatisfied with the process, they will go to the Ombudsman and that costs a lot of, that process is a very expensive and slow, drawn out process. So it's not pleasant.
And really, we spoke about this in yesterday's webinar, actually, when we were talking to Gabby, where her business is renegotiating debt for customers that are having very serious life events. And, you know, for those customers, if they don't find a service like that and they go into a default situation, that can really ruin
their creditworthiness.
Their real creditworthiness and put them, well, firstly, in a real hardship position where they may not have the ability to repay. It goes on their Equifax report, which then, you know, ruins their chances of future credit or seriously impedes it.
They could have a deposit that they can't get back, as an example.
Exactly. Plus the stress. So, you know, there's a lot of serious implications there, you know, to do with their future.
And if it comes to a point where the bank wants to repossess the property again, that is such a long, drawn-out process. That takes, from the time the bank repossesses the property to the time they can actually get it sold, can sometimes take up to a year. The customer's paying interest the whole time. So if you've put them in a hard situation and they're struggling, it's actually making it like twice as hard for them.
Yes.
Yeah.
And they could lose, you know, so if that property...
They lose the equity in the property, because generally the bank will sell it for whatever they can get.
Yes.
So it might not be true market value. So any equity the customer has is eroded. So for not doing a few checks at the start, you can actually really ruin someone's life financially and mentally and and everything. So.
And particularly, you know, if the property was in the first couple of years.
New builds generally drop in value.
Right? And it was already at a pretty high LVR when you started, and there's been no gain to the value. And like you said, the bank's just selling it because they need to clear it. So they could be in a real deficit.
I used to work in mortgage insurance, and I've seen the size of the claims, you know, and it's quite common for borrowers to walk away with a loss, and then they obviously the bank is covered by the mortgage insurer, but the mortgage insurers actually then chase the borrowers for the money owing. So
Yes, I was just going to say that. So please be mindful of that.
It's not like the insurance covers everything and everyone walks away. There are implications still for the customer.
If it's short, it goes back on the customer.
And it goes on their credit file.
Absolutely. What about for the broker then? The implications for the broker. So the broker doesn't fully discover the living expenses or doesn't document them because they want to get the deal across the line, and so they sort of just turn a blind eye to some of the expenses. What could go wrong for the broker?
You really can't afford to turn a blind eye. Not when it comes to this, you know. You can start.
Well, we've touched on already, obviously, the media coverage and the negative coverage there. Accreditations, lenders will pull back if they can see you've done the wrong thing. Like Dev said before, they're already reporting to aggregators when they're seeing brokers doing low living expenses or consistently using HEMS for every one of their customers, because we know that's not correct. Obviously, we touched on the fact they can claw back your trail if the loan falls over. If you're not only a mortgage broker, but you're a financial planner or an accountant, if you're struck off as a mortgage broker, struck off by lenders, that you have to disclose that when you're renewing your other memberships, and you may find you can't do those things either, so it affects your livelihood.
I was just going to say stuff like, you know, the whole industry gets to know or see who you are in your face on maybe the advisor or an ASIC alert, and it is after all your reputation. You know, things like this could be missed. You know, it's, you know, social media is so large and so big that it does play an effect, you know, for future employment as well. So all those things need to be running through your head before you even think about turning a blind eye away from it. So just think of the obligations that you've got.
And also the media, if the broker does the wrong thing, they really like to broker bash as well. So, and again, if you're proven to do the wrong thing, it's going to be everywhere, and there's no escaping it. Another thing people generally don't think of is PI cover. If you've got PI cover and something goes wrong, if you haven't verified everything in that loan file, you don't have PI cover.
You're not covered.
It's actually written in the policy wording, so be really, really conscious of that.
Absolutely. So there's your career gone, basically.
And probably a lot of money.
And a lot of money. So you can't get PI insurance. The lenders have struck you off. The aggregators have also terminated you. The industry bodies have terminated you. So your career as a mortgage broker is over, and it's public.
And it's possibly affecting your other income streams if you do other stuff as well.
It could be also not just as a broker, but in the whole financial industry.
Right.
Because it's not just a small industry. Everyone knows each other, and you know, word goes out. So it's
good point. So let's talk about the lender's role. And Zach, you might be able to talk to us a little bit about this. What's the lender's role in identifying potential problems? We've spoken quite a bit about the broker's responsibility.
Yeah.
But what are the lenders doing?
Look, with lenders, there's always they're not just looking into HEMS, they're also looking at other buffers as well. So you've got serviceability, you know, your servicing of assessments at like, whether it's 7.25, some of them are doing 8%. So again, all those buffers are also being added on, like how we said before, the notional rent being added on as a kind of like an extra backup to also, you know, in the event that if anything does go wrong, hopefully not, touch wood, but if it does, the lenders have backed themselves up as well. In the process, they also want to make sure the customer's also looked after. And that's the reason why we've got all of those buffers as well as HEMS as well. Just about HEMS in particular, on servicing calculators, even if you do put in a lower amount, and it could be legit that they only spend a certain amount based on their family size or lifestyle, you'll find that HEMS plays a part where it calculates automatically what an average living expense for that particular scenario or number of family, children, all of those things that come into play. That doesn't maybe allow you to pass servicing. So some lenders have their own calculators that do that. And that's, again, to make sure that it's all been looked after.
The important thing about HEMS is it's there as a buffer. It's not to be relied on. No. Because while some people might have expenses around that much, it's not going to be the case every time. So it's especially if their costs are higher and it hasn't been put in the calculations. So it's really important not to rely on it. And I do see brokers who do put in the servicing calculator the exact HEMS amount, like it ends in $3.1693. You know, obviously it means they haven't checked because it's just a weird figure. So, you know, and the lenders will pick that up in a minute if they want to find fault with your files. So just be really, really conscious of doing the right thing there.
Just on that as well, we find a lot of brokers round up their amounts. So you could, there's nothing that, I mean, as long as you're rounding it over and not under. So even if you're putting it to the cent, it looks more realistic from a lender's point of view. Just a little tip. So, yeah.
That's a good tip. Yeah, because I think what we've seen in these recent cases with ASIC and the banks is that they're feeling that the banks didn't do sufficient inquiry. They didn't do reasonable inquiry.
And another part of that too in the case that's before court at the moment is in interest-only lending. This isn't to do with living expenses, but they're assessing the interest-only payment as the payment amount and not allowing for the higher payment when the interest-only period expires, and people are going into hardship when that expires. And that's one of the allegations in this case that's in court at the moment, that it was consistently happening. So be really conscious if you're putting them on a honeymoon rate or an interest-only rate that you're using the proper servicing rate to assess.
Yes.
You find a lot of lenders at the moment, when they assess, they'll assess at principal and interest rates, not at interest
I know
only.
a lot of them have turned around, but
because of that,
people were sneaking deals through on the interest only. So just be really careful with that.
Yeah, good point. So just before we get into some positive guidelines, I'd just like to invite anyone. We've just got about 5-7 minutes to go. If there's any questions you've got for Zach or Lisa, put them through now in the Q&A section. And but if there's questions that come up for you after this webinar, feel free to email them through to us and we'll get back to you on that. So let's get to some of the positives now in regards to what can brokers do to make sure what guidelines and best practice tips can they use during their appointments and dealing with the clients to make sure that they capture everything correctly?
I just think that if it's best to ask the customer. Don't be scared to ask them. The deeper your conversation, it's also not just that. You're building that rapport with the customer. You're trying to know who the customer is, and obviously, you're not just going to do this one deal. You're going to stick with them for life. So knowing your customer and their lifestyle is very important. I always say cross-reference, cross-check the information, and the way to do that is pretty much with bank statements. There's a lot to be said on someone's bank statement. It can tell you everything and how their mood swings are, to where their favorite shopping malls are, to every little detail. Sit down with them, just confirm the expenses and make sure that they all align, and just document and communicate really to the lender exactly why their living expenses are what they are.
Yeah, so, and just I suppose on top of that, it's just a sanity check. Does the living expense sort of match the customer? I mean, like we said, in rural areas they might be lower, in the city they might be higher. 5 kids versus 1 kid. I mean, it's all going to vary. So it's just sort of putting an eye over it and thinking, does this seem legit? Yeah. And again, asking for further information if it doesn't.
Yeah.
So you'd be asking for, even if it's not required for that particular loan, you'd be asking for 3 months of transaction statements?
Yes.
I would definitely ask, because that would give you a very good picture.
Yep.
Sometimes what they do is put a bulk amount in their credit card every month and live on the credit card. So in that case, I'd probably ask for the credit card statements too, although the bulk amount is probably a good indicator of their living cost. So, I mean, but if you wanted to go into more detail, if you're doing a living expense form that has the breakdown, probably wise to ask for that too, just so you can record it accurately.
Yeah. And I think, when asking for certain documents, if they're not specifically needed for that loan, I think we just need to be very upfront about why we're asking.
It's always smart to have it on file. It's better to have too much information than not enough.
Yes.
Exactly. And to let the customer know that it is for their protection, that you want to ensure that, the affordability is there, and that there's no negative consequences for them down the track.
Correct. And I'm a big one on that. Ask for more information up front. I think it's better to get it at the start, rather than going back to customer dribs and drabs asking for more information. It doesn't look good on your part as well. So, or
at the very least, at your first meeting, say to them, I might have to come back and ask you for more. Like, leave the possibility open, and that way, if you do have to come back, you don't feel so foolish about doing it. Because I know a lot of people don't like it. But if you prepare them for the fact you might have to come back, then it shouldn't be a surprise to them.
Yeah, absolutely. We have had one question here. Thank you. I use an aggregator provided living expense calculator and I send it to the customer to fill and return. Is this okay?
Yeah, as long as if the customer's filling it out, that's probably a really good thing, because they're going through it and will probably more accurately list their costs than if they're firing off numbers to you while you're asking. The thing is obviously to get something to back that up, especially if their living costs are low. I'd still get something to back it up, like their bank statements, or if they give you the form and something doesn't seem right, always just go back and ask the question. But yeah, and you'll find the forms over the past few years have come from asking a figure to asking like a whole list of things, and that's generally the way everyone's going at the moment. So it is a lot more detailed than it used to be.
Absolutely, it's itemised now.
Yeah, pretty much.
Categories and subcategories.
Does it go, Stephanie? Does it go in, like some aggregators supply that form, but does it go into detail, like how there's things like
NMBs did.
Yeah, so yes, headings and subheadings under that. And I think it's just really prompters. Isn't it?
Yeah, it does. And some of them might not be relevant to your customer, and that's perfectly fine. Just put a note in there. Because not every expense is going to relate to every single person.
Correct. So you might have a single person that doesn't have a car, but they have a bike. So there's certain living expenses with a push bike.
Or a bald man's not going to have hairdressing appointments and shampoo and stuff. I mean, it's just again a common sense approach.
It is common sense.
Okay, well that's been fantastic. Have we covered everything? Is there anything else you think we haven't spoken about that might be important to these guys listening?
I think if they've got any questions, feel free to, even after this, I'm more than happy to take calls and stuff.
Fantastic. Well, we'll make sure in the email that I send out to you that you've got our details here at My Local Aggregation and also Zach's. So any questions you've got about this topic, please feel free to send them in to us. And if you would like a copy of this recording, if you could put that in the Q&A section now or send us an email, that would be appreciated. I think you've got the email address, the social media email address, or you can send it directly to me, which is Stephanie with a PH at mylocalbroker.com.au. And with that, we'd like to thank you very much for participating today. And we hope to see you again in a fortnight's time, where we've got 3 webinars that week. We have New to Industry on Tuesday. On Wednesday, we have Masterclass. And on Thursday, we have Chief Related, which are software. So those communications will be going out in the next day or so if you'd like to register for those. So thank you very much, Zach.
Thank you.
And Lisa, thanks for joining us.
Pleasure.
And we'll see you all soon.
Thanks, guys.
See ya.